PCE inflation numbers just came out, and good news, they're at expectations. Now, that is the basic news. We generally already know that the PCE report is going to come in at expectations because it's made up of components that are within CPI and PPI, which are reports that we get weeks earlier. Now, this is the Fed's preferred inflation gauge, and markets honestly just needed a little bit of reprieve today to get away from more drama around tariffs or other news coming out of Trump leading to uncertainty. For example, yesterday we got the Trump tariffs, we got the upholstery tariffs, we got the kitchen cabinets tariffs, we got the bathroom vanities tariffs, we got the pharmaceutical tariffs. And so people today were looking for like, all right, we got a lot here. We got the Russians going crazy. Can you just give us something a little positive today? And this inflation read coming in at expectation is exactly what people needed. The reason people needed just a little bit of boost or hope here is because after the Federal Reserve promised us, well, they didn't really promise us, but gave us the impression that they were setting up for 3 rate cuts this year. What happened? We got Powell, who ended up turning neutral on us, which was weird because the statement was so dovish. It was literally like an intraday flip-flop. It was wild. It's like, here's the PCE. Wow, dang, that's dovish. And even the statement with now the labor market is no longer solid. Oh, we're going to remove that too. That is really dovish. Oh man, we're getting rate cuts. Yields fall below 4%, which we had scenarios. We're like, if Powell is dovish, we're going to get yields under 4%. If he's neutral, we're going to get yields at 4.15%. That was my expectation. This is exactly what I broke down to course members in the Alpha report. We have a coupon expiring on that, by the way, at meetkevin.com today. But that's what we broke down. We're like, look, that's how we're going to play this. That's our expectation. And so then we ended up getting a neutral Powell. And then in the days after, we got all these other members from the Fed that are like, yeah, we don't even know if we have to cut rates anymore. Not only that, but you get Powell, who has his own very interview, which has the craziest softball interview questions ever, and he basically doesn't talk about cutting rates at all, which is insane. And so it's no surprise now the 10-year is sitting around 4.16, but the good news is this PCE inflation report is good news because it's at expectations. Now, we already knew it was going to come in at expectations. That is what we talked about to everybody, to course members in the course member last week. We were like, we already have the components. It's going to come in at expectations, but this is exactly what the market wants as a catalyst to go, okay, whew, maybe we could get back to 600, okay? Because inflation's had expectation. Now, understand the numbers for a moment here. I'm going to break down the numbers, and we got to talk about the odds of rate cuts because we're still looking at 2 rate cuts. The timing of those rate cuts has just shifted a smidgen. Now, in order to hit that smidgen, I want to cover something that some of you emailed me about. I've never had this before where people emailed me, and they're like, hey, Kevin, what was that sponsor you had on the channel that one day? What they were looking for was this. Okay, this is the Investing Pro Plus subscription. You go to meetkevin.com/pro, you could sign up for this, and remember to use the Pro Plus plan, and if you use my link, you get extra money off. You get extra bonus discount. But the reason people emailed me about it is because you could type in any company over here. Like, I type in Tesla, and I could get the expanded EPS forecast. This is what y'all have been asking me about for years. For years, y'all have been asking me about this, so it's no surprise that people are like, hey, Kevin, what was that company again? Yeah, it's meetkevin.com/pro. Look at this. I type in NVIDIA, the NVIDIA Corporation, and I could get economist and Wall Street forecasts going all the way out to 2035. So I could really do financial analysis going out with longer term data on these companies, which is great for longer term investors. So this isn't like just some kind of like $30,000, Bloomberg or Refinitiv, Reuters subscription that you have to pay for, which I've paid money for those in the past and still do today. And it's mind blowing to me that one of the biggest features of those software is EPS forecasts, in my opinion. And here it is for a fraction of the price. MeetKevin.com/pro and then get the Pro Plus plan. You could get these as well. So go check that out. Really cool sponsor today. But anyway, so let's now understand the components of this PCE report. So the PCE inflation report and, what our expectations are going forward. Well, let's find out. So here's the current release. So we're going to view the current release. These are the numbers for August. So keep that in mind as well. These aren't this isn't September, right? This is going back to August. We are at the end of September. So PCE kind of comes late in data. It's very common, it always does. But the good news is here, personal spending came in a little bit higher than expected at 0.4%. The expectation was 0.3. Personal income was 0.4, expectation was 0.3. And personal spending came in at 0.6. The expectation was 0.5. So we beat on this, and we actually revised a little higher on real personal spending as well. We also had a downward revision in core PCE in last month's reads from 0.3 to 0.2. That's a really big deal because that little bit of a change annualizes out to a big change. I mean, think about it. 0.2 annualizes out to 2.4% inflation. 0.3 annualizes out to 3.6% core inflation. So basically, we had more spending here. Look at this spending dip over here in personal income, outlays, and savings. So savings is the black line. You could then see spending is the orange line and income is the blue line. Look at this. You actually had incomes decline. Part of this is because of the way they calculate inflation. In May, incomes build up in April, and now that extra cash is being spent. This is why people say there are distortions in sort of the post-tariff data that we're getting, because you had these distortions here that potentially led to a pull forward of spending right here, and then led to an artificial sort of saving during panic, and then you ended up getting additional spending as corporations are like, hey, we actually aren't in a place where we haven't increased prices yet for tariffs, so you still have an opportunity to buy. I don't know why all of a sudden I sound like a character from, a movie. But anyway, it's too early and the coffee hasn't hit yet. But changes in consumer spending as of August, take a look at where some of this money is being spent. Keep in mind, these are changes. Transportation services up, food and services up. That's kind of healthy if you think about it, right? Like, this isn't like people are now cutting out their vacations, or they're cutting out going on, to restaurants or whatever. You've got, gasoline's up here, healthcare's up here, housing, utilities, clothing and footwear. The lowest over here, motor vehicles and parts, and furnishings and household equipment, probably because a lot of this is what was pulled forward, because we knew these parts were going to get hit a lot with tariffs, and we thought we were done with them, but we're still getting hit with tariffs, right? So now, course members went into this PCE report knowing that we were probably going to get a number at expectations and that we'd get up after that, which is exciting. And look, Restoration Hardware is right here. It's lost that 207 line because of why? Well, that good old tariff announcement yesterday on upholstered furniture, which it just almost feels like targeted at Restoration Hardware at this point. I mean, I don't have any exposure to Restoration Hardware, but it's one that I watch a lot to see tariff impacts. Now, let's keep going into PCE here. PCE for August increased 0.3%, excluding food and energy. Okay, we saw this. We want to look at some of the other components here. Technical notes within composition, wages and salaries, as well as supplements of wages, increased based on the current labor statistics. Private wages and salaries increased, and reflecting a $28.8 billion increase in service-producing industries and a 0.1% decrease in goods producing, with a government salaries and wages increase of $4.3 billion. So you're actually seeing services really kicking butt in terms of the wages that are going out. Goods flat, again, probably under the weight of sort of this tariff warfare that we've got going on. But, broadly, flat is better than like hugely negative, right? So This is not a bad report. This is very good, not only at expectations, but we've got the right numbers inside of the actual components of these documents. Now, if we go to the full release and we get full tables, we might get a little bit of extra information here. Let's take a look at this. Real PCE, again, we're right here at a 0.3. Fine, no problem. We've got, let's take a look at some of the tables over here. These are going to be personal incomes. We did just break down personal incomes. So we're going to go a little bit deeper on PCE here. And I want to see, here we go, personal consumption expenditures, month over month. Durables, look at this pop in durables right here. August, highest month for durable spending all year long in terms of changes. And non-durable goods, highest month of spending. Holy smokes, look at that. You were negative in April and May for some of these categories, very low at the beginning of the year. People have gone crazy on goods spending again despite the tariffs. Holy smokes. That's actually, that's pretty impressive. Now these are a percent change from month 1 year ago. Perfect. Then we've got changes in personal income. That's fine, we've already gone through some of those. Let's see comparisons over here, previously published. Let's see here, disposable personal income. Disposable personal income, we've got the 23 chart, 22 chart. Let's see, changes in personal income. 24, 25, here we go. Seasonally adjusted annual rates, disposable personal income. Look at this. So 90, what do we got here? $90 billion change. We were negative in May, and we're just up in June, up in July. So a little bit, these are changes to prior reports. That's it. This is really broadly a good set of data. Now let's see what some folks are saying here. Some of the suits are saying there were no surprises in August PCE data, though both income and spending were a smidge higher than expected, which is fantastic for the economy. Following an upward revision to consumption in Q2, that's not exactly an argument for needing deep rate cuts. At least the public at large is not behaving as if they're on the precipice of losing jobs. This is true. If people were feeling they were about to lose jobs, they probably wouldn't be going on vacations or spending all that money on restaurants, right? The bond market's reaction has been negligible. Well, that's okay, because we already priced in, quite a bit there in terms of yields moving up. Oh, and now it looks like they're saying yields ticked up as PCE meets expectations, right? The bond market reaction has been negligible, though the initial impulse from equity seems to be one of relief. Of course, because it's somewhat of it's something of good news in the face of the last few days where we've just had a little bit, unfortunately, of red days. Now, in our course member live stream, we've been talking about how, this is going to be not only a tough week, and so it's a tough week to play, but you might want to wait until into October because there's so many catalysts that could end up leading us to have some bleeding and some red this week and next week, because next week we've got jobs. This week you get the anticipation of shutdown and jobs in Russia. These are all things and components that we talk about when we set up our Meet Kevin Alpha report. Right after I post this video, I'm going to be going into our Alpha report for today, and we're going to set up our strategy. Remember what we did yesterday. Yesterday we were actually live with course members during this double dip drop on the Qs, and we were able to draw a line, and look at this, we even hit it again. So you had 3 opportunities on that line yesterday to knock the bottom. We called the bottom here, and we even bought the dip and send a trade alert out to everybody who's in the Meet Kevin membership. We've got a coupon expiring on that later today. And then also remember to go to that Investing Pro sponsor today. It's a great sponsor. So remember, use the Pro Plus plan and go to meetkevin.com/pro to get that extra 15% off. You get that extra 15% off with my link. So anyway, look, broadly, this is bullish for today. I'm really excited. It covers the headlines of the madness of Trump yesterday having even more tariff announcements and uncertainties and sort of a paper TikTok deal that is fugazi and doesn't really mean anything. People are going to call me TDS for that, and I'm just calling it like it is.
Knows about this.
We'll try a little advertising and see how it goes.
Congratulations, man. You have done so much. People love you. People look up to you.
Kevin Paffrath there, financial analyst and YouTuber. Meet Kevin. Always great to get your take.